Thank you for watching Resource Talks and welcome to part one of my coverage at the Precious Metals Summit here in Beaver Creek, Colorado this year, where over the last couple of days I've single-handedly depleted at least half of their strategic peanut supply. But I've also spent some time talking to some of the smartest people in the room, trying to figure out if this is the actual breakout and whether it is the bull market in precious metals that we've all been waiting for. Is it a breakout or is it a fake out? And if it is an actual breakout, what is the thing that is going to make me the most money over the next 12 months? And then after that, when is this bull market going to end? And what is the thing that's going to end it? That's what I was asking them, and that's what you're about to watch. All right, Neil, I want to talk to you about bull markets and specifically whether what we're in right now is one. Is this a breakout or is it a fake out?
No, we're certainly in a bull market. You know, we're seeing prices. I think I looked at GDX earlier today and it's up 95% year to date, which on the big gold majors, you know, just moving that much in 8 months, you certainly can't argue that that's not a bull market. So yeah, no, this is definitely a proper bull market. You know, it feels a bit weird because we've not had one for quite a long time. So yeah, there's lots of smiley faces at the Precious Metals Summit at the moment.
All right, Greg, is it a breakout or is it a fake out?
No, it's definitely a breakout. There's more money coming in that's been on the sidelines, and so that's the first thing you look for. And I think we're also seeing, companies. You know, the enthusiasm is definitely there, and there's definitely a pickup in people's steps around here. The question is are you going to go up and then come back down? And that's usually when everybody gets all excited, you got to be a little bit more careful about what's going on. So I'm guessing that we're going to see we'll see some up and downs. I mean, it's not a straight up move. I mean, what we are seeing is some of these development stories and exploration that hasn't been done for a long time because there's been no money available. They're starting to get money. And so they'll start to get results, and then that'll get people excited. So there's still that to come in this cycle. I mean, and this conference is, it's definitely the exploration development. So, yeah.
Well, you weren't here last year, but you were here the year before that, I think. How is it feeling now versus then?
There's definitely like I said, people have definitely a pickup in their step, compared to where they were, a couple of years ago. And, I think, for us, we do invest across, the small caps, micro caps to the large caps. And, my thinking last year was really, the money is going to be made in the producers because that's going to be the first money that comes in. And that was the case. But, now the money starts to, filter down. And so you do have to pick your shots. So, I mean, that's the difficult thing is picking your shots with, good projects.
All right, Joe, I want to talk to you about a bull market because this seems a bit bullish here. I mean, you and I were just talking, but you said you're seeing a lot of people that you haven't seen in a while here at this show. But is this a real bull market or is it more of a fake out?
Well, I would say if like I always take it back to a cane toad. So cane toads in Australia, I mean, they last longer than they do because people think a good dry when they try to get across the desert will kill them, but they just bury themselves and then they wait for the rain, then they come back up again. I'm seeing a lot of those kind of people here now.
Okay.
Yeah. So it's raining.
But is it a real bull market or are they just kind of?
I think it is. Yeah. Like there's a commodity bull market, there's an equity bull market.
Yeah.
So the gold's been doing well for more than a year. Driven by central banks and gold ETFs. And it's never sort of gone down when it should have gone down when real interest rates were going up. The central banks kept it elevated. But for the equity to actually move, we need people looking at gold equity ETFs in North America, and that slips, from the idea that real interest rates are actually directionally going down, which directionally we're expecting a cut in September.
Yeah.
But we're seeing a lot of geopolitical risk. We see what's happening with Israel and Qatar. We just saw the shooting thing that we just talked about offline. All those sort of events impact a lot more uncertainty, and then we get the safe haven demand. That sort of growth in the gold price will definitely impact the producers first and continue to impact them. But the cash they've got and some of these guys who want to still grow should hopefully bleed into some of these development plays here.
Yeah.
I think you'd be pretty hard pressed to say that this isn't a genuine breakout. I mean, we've, for so long we've been consolidating and waiting for some major move. We're well past those technical levels of sort of 1900, 2000 an ounce now. We've already had our breakout move that's had its first consolidation, sort of that $32 to $34, $3,500 level. Technically it looks pretty textbook. It looks like phase 2 of this gold bull market has probably broken out and is underway. You never know. But putting my pure technical trader hat on, it's pretty pure, to be honest. It looks pretty good. So I'm in the camp that this is probably innings 3 or 4 of this market heading into the fun phase, which is usually the momentum phase. So
Is this a breakout or a fake out?
Yeah, it's a very interesting question. And just today, you're looking at the RSI, Relative Strength Index, it's the highest it's ever been. You look at gold stretch from its 200-day moving average. You look at gold stretch from its 3-year moving average. And every time it's this stretched, it's peak, 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 all the way back 20 years, all right? So the question is this time different? And usually at tops, people are like, this time's different, but it never really proves out to be. But there's some, fundamental stuff that's underlying gold that's, driving the gold price higher that's different from previous periods.
I was just about to sell some stocks, so you might as well tell me what that thing is before I do.
Yeah, it's always good to diversify, right? And take gains and, buy undervalued, whatever, fixed income or real estate or growth stocks, when gold rips up. That's the best way to manage your exposure as opposed to trying to time the market. But, one of the reasons, the structural supply-demand thing, I love the royalties, right? If you just invested in royalties over the past, since 2007, you'd be up 32,000%, better than Buffett. But there's been 3 royalty acquisitions this year. Sandstorm got taken over. Origin, that was one of my favorites, got acquired. And then Elemental. Now, this Elemental story is very interesting because Tether invested $100 million in Elemental. Tether participated another $100 million into the deal. So they are on the board of Elemental. And then Tether, right? The Tether stable coins. There's a US dollar stable coin. There is a gold stable coin. So first of all, the dollar one, they own short-term debt instruments that pay a yield, so the Tether dollar pays a yield, but also 5% of their portfolio, they're buying physical gold. That Tether gold token, it's backed 100% by physical gold. Tether is buying 2 tons of gold per week from various sources, but they're all keeping it in Switzerland in their own vault, outside the system. And then the CEO has been here. He's looking at other mining opportunities, the CEO of Tether. And the CEO of Tether believes the gold stablecoin is going to be larger than the US dollar stablecoin. US dollar stablecoin, it's got $198 billion market cap. The gold stablecoin is only $2 billion. And the reason why, we know the reason why, because crypto holders don't want to own dollars, even if they're getting 5%, because they know the dollar is going to be devalued. So that Tether's buying the equivalent of the world's largest central banks every year, as big, if not bigger than China. And if the Tether gold token really picks up, they're going to be cornering the world's gold supply. It's 100 tons per year. That's what China buys. And so there's structural things going in the supply-demand equation for gold, where the demand is going up and the supply has not been going up.
I think this is the real deal this time. A lot of reasons we can go into, but basically, this is the real deal. The only caveat here is that if the major markets take a real dump, which I think they might, we're going to get hurt temporarily in the gold space, silver space, and metal space. But it won't last long. And this is the real deal.
But what do you think is going to do well during this bull market? Is it specifically the developers? Is it everybody? Is it going to go in stages? How do you see that?
Yeah, no, it always goes in stages. You generally have the quality moves first. You know, the big boys, the big royalty companies, the big gold mining companies, they tend to move first. Then the smaller producers have a bit of a catch up, and then there's a bit of a rotation. You see fund managers start to think, well, you know, what's not moved? And then the big laggards for quite a long time have been the developers trading at your 0.1, you know, 0.2 NAV. We'll see those start to go to 0.3, 0.4, 0.5, which, you know, on a percentage basis would give pretty significant moves, but some of them have moved already. Yeah.
I'll tell you what, I write the Golden Portfolio. I'm a CFA MBA. I try to find the world's best mining opportunity, like cream of the crop, highest grade, highest potential for success. I invest for like the 99%. The companies that are able to make money 99% of the time. A lot of people that invest in metals, they invest for the 1% of the time. You know, that big silver blow off, that big gold blow off, where the miners they invest in are unprofitable for 99% of the time, but the big blow off, they start going up 2x, 3x, 4x, and we're starting to see that, right? We're starting to see that in some of the silver miners. Core and Hecla haven't moved in decades. Now they're up 200, 300, 400%. A lot of the silver mines, you know, Avino, Silver Tiger. I've was covered primarily silver miners for 10 years. They did nothing for 10 years. They're starting to double and triple. That's a sign of caution, because whenever the silver really starts getting rolling and the silver miners get rolling, it's been a top before. I run a regression, 50-year daily regression between gold and silver. What should the silver price be based off the gold price? When silver really spikes up, as it did in 1980 and 2011, silver trades at a 60% premium to its fair value based off gold. That fair value right now at a 60% premium is like $80 silver. But the thing is, when silver really rips up and goes into that crescendo peak, that's also the peak of the gold market. So I'm cautiously like optimistic, and I'm happy for all the silver miners, but also I'm kind of a little bit wary. It's a market. It's hard. I'm not going to sit here and pretend that I know exactly what's going to happen 6 months from now. And let me tell you one more thing. The cream of the crop development stories, Rio 2, Phoenix, Alex Black. He did it with Rio Alto. He's doing it again. It's going to be in production in January, like 2 months from now. The project starting at 20,000 tons per day. It grows to 80,000 tons per day. That's worth $2.5 billion at $3,500 gold. The stock trades for 400 mil. So even though it's gone up 2x, 3x, 4x, it's still undervalued by like 75%. And then you look at Montage, you know, a cream of the crop mining story. Stock has done extremely well. Their project Phoenix, they are increasing their grade through satellite pits. They're basically doubling the production of their feasibility study, and it's like not in the market. So that's like a $5 billion NAV, and Montage is trading for only $2 billion. So it's like, even though they've gone up, like the value's still there, and that's all I look for. You know what I mean? Because even if gold corrects by $1,000, their market cap is still lower than the NAV at $2,500 gold, and all they need to do is execute and prove out their resources and get in production, and it'll re-rate higher, and you're still going to make money. So I just look at the gold price as the cherry on top, on top of the whole fundamental value creating process what miners do to improve their projects.
If this is a real bull market, what do we buy? Is it developers? Is it producers? Is it more explorers? And even more specifically, is it more, because the gold and silver plays seem to be getting more attention naturally, but is it maybe then time for copper to be a bit of a contrarian, or like, where do we go?
Yeah, I mean, I would say it all depends on, you know, I don't want to wishy-washy, but it depends on the individual investor, how much risk they're willing to take on.
Depends on how I feel. You care about my feelings?
Yeah, well, I don't, but somebody might. So what I would say is that if you're worried, like if you're very risk averse in this environment, but you want beta to gold, then stick to the producers or a gold equity ETF, or do the royalty companies, the big ones. But if you're willing to take on more risk, then you'll go down into producers, and then maybe intermediate producers, and maybe even junior producers if you're look for a higher beta. But then if you really want the triple baggers or whatever you call it, you know, then you're into the development plays. If you want the 10 baggers, you know, then you go into the juniors, which bring on a little bit more financing risk, which has been lessened by the current market. So now the financing risk isn't as elevated as it was 12 months plus ago. You know, so these people can now raise money where 12 months ago they would have a harder time doing it.
I think good development stories I'm looking for those, and I think and exploration is going to get rewarded. And so companies that have exploration hits that then looks like okay, it can become a mine. That will get rewarded also. So you're definitely going to have a pickup in kind of a where people are going to get a little bit more excited in that space on the exploration side.
What do you think makes the most money?
So far it's been pretty textbook. The early movers are the big boys, the Agnico Eagles and the large cap, the royalty companies. They were really the first ones to move. About this time last year they started to move, and there was a bit of gnashing of teeth that the smaller cap stuff wasn't really doing anything, and I think we're just past that phase now, and some of the sort of small to mid-tier producers are really starting to chug along. Some of the better juniors, have had big moves, and even some of the sort of more leveragedy bull market names are starting to have a run. But I wouldn't say it's full all boats lifting just yet. So to me, it's a really nice part of the market, where active management can still pick some winners. You're not seeing the turds just wildly outperform, which is where I sometimes struggle, because I don't like to lower my standards basically on what I want to own. I'm not going to try and pick the bull market names that are going to have 10x leverage with gold at 4,000 but are going to be zero at 2,000. So for me it's a nice place to be honest.
Yeah. Is that noticeable in the business for you as well? Is there any nuance that you can provide here where you're like, oh, I've started to notice this thing, and that only happens in a bull market?
Well, 2022 and 2023 were rough, I can tell you that. We had pretty much nothing. It wasn't crazy outflows, but every flow of funds was an outflow, right? There was no interest, which is typical, right? That was when everything was the cheapest, but investor interest, we're all humans. We did deal with some outflows. That has certainly stopped, and we've had a decent trickle of inflows. I wouldn't say it's, you look at the flows into the GDX, I'm sure you've spoken about that. The main mining indices have not seen crazy bull market type flows from generalists yet. It's just, again, it's that kind of nice phase in the cycle where there's interest is returned, there's a bit of capital coming back in, but I'm not seeing crazy town, just get me in at any cost, shares outstanding on the ETFs, lines going to the moon. Like it does feel like a very positive. I'm not worried about tops and cycles or anything like that based on what I'm seeing from flow dynamics, and some of the charts are starting to look a little vertical, I will say, but my gut is that we're still in this momentum phase, and we'll get more consolidations. We'll get probably more time consolidations than big price corrections, is my guess. It's a nice time. It's a good time to be in this industry.
What I've been doing is buying all three. I've been buying, well, not really producers, but people with advanced stage projects that are ready to go into feasibility or, raising money, funding things. I've been buying early stage discoveries with, drill holes and such. And I'm also putting money into people that I know that are working in good areas, know what they're looking for, and have the technical and financial competence to advance a project to the stage they need to advance to, but more importantly, the intelligence to drop a property if it's not working. That's the biggest problem we have in this sector, at least in the junior sectors. Mm-hmm. Most people don't know when to quit. Yeah. Investors as well. When I first started working with Rick Rule, I was surprised at how many people had 100 stocks in there, and they didn't know why they had those stocks anymore, because the idea that had been sold to them died, and they didn't realize it. Yeah. So in this sector, get out if things go wrong.
What do you think ends this bull market, though, and when could that be? Why I'm asking it is because I'm thinking, is this a secular or cyclical bull market? Is this a small one within the larger cycle, or is this the big one that we've all been waiting for, and how long does it keep going for?
Good question. I think you do have to get to the point where you have where they deal with debt. The debt in the U.S. is a big item that comes into the play here. And if they're going to continue with a massive amount of issuing debt, gold is highly correlated. It's 93% correlated to the gold price since 1971 when Nixon closed the gold window. So the faster they issue debt, the faster the debt goes up in the U.S., the gold price is going to go with it. Now, if you do get some type of where they come in and are able to refrain from issuing debt, then you're going to get some slowdown on the gold price. I mean, it's pretty clear.
Yeah. How long can that keep going on, or how long can we keep going on at this pace, though? Because I sure am enjoying the pace at which the gold price has been going up, but how long can it keep going up that quickly?
Yeah, I mean, that's a good question. I mean, so for it to double from here, you're talking $7,200 gold.
I'll put that in a title.
Yeah. So, I mean, gold going from 1,850 to 3,600. I mean, you've had a double. So now, are you going to see another double? I mean, that's it's open for debate. It's going to depend on how much debt is created, really. Yeah. And I don't have the answer for that. I mean, right now you're starting to see some funds that haven't been in the space start to work their way into owning some gold assets, which is good to see.
Yeah. How's it been from your perspective? Maybe a bit of a nuance on the business from specifically your perspective as a fund. Is new money coming in, or people asking you to do more riskier stuff? What's the nuance?
We are definitely seeing money come in. I mean, most of our money comes in off of the major platforms, Schwab and Fidelity, and but I still haven't seen where the advisor comes in. It's been mostly retail. It's coming in. So the advisor, they'll come in, at some point, but probably at higher levels. But we haven't. There's not a massive euphoria out there yet. I mean, you see a bit more euphoria around this conference because they're dealing with good margins, and there's definitely some money that's being raised that hasn't been raised for the last couple of years. So I think we will get to the point where the folks are chomping at the bit to get in, and that's when you got to be aware.
Yeah, and that's not now though. We still have some room to go.
That's not now. That's not to say that we're not going to have corrections along the way. So I do think we'll have corrections along the way. Yeah. So you have to be aware of that.
It could keep going for quite a long time. One thing I like is the gold price just hasn't gone parabolic. We've seen this lovely slow climb all through the year. I think that's very healthy. If we can keep it going like that, I wouldn't want to wake up one morning and the gold is up $500 an ounce. I'd be very nervous there's a bit of a crash coming on the back of that. So as long as we keep having this nice steady growth in the gold price and silver price especially, then I think we're in for a longer period of these nice returns that people are seeing almost weekly at the moment.
Well, that's a good point. That leads into sort of my next question, which is this a secular or a cyclical bull market? As in, is this the big one that we've all been waiting for? Is this the serious bull market, or is it something that's going to be gone in like 2-3 months from now?
I don't think it'll be gone in 2 to 3 months, just because of the bigger stories that are driving this rise in the gold price. Really, it's the war in Russia, the Russia-Ukraine is part of this. It's the US, it seems to be trying to devalue the dollar, as fast as they can, and it's just. And we saw the money get taken away from Russia, especially. The central banks of Asia and Africa, parts of the Middle East are now selling treasuries and buying bullion. So as long as that keeps going, I don't see any reason why that's going to stop tomorrow. But you never know in the world. Trying to predict the future is a little bit of a mug's game as well.
Well, there's a more structural movements in geopolitics and global economics, though, that some of them have been around for a while. So does that mean that the bull market is never coming to an end, or what do you think is going to bring it to an end?
Well, they always come to an end. I don't really want to try and be some sort of doomsayer here and predict how or when the bull market is going to end. I would just say people should enjoy it. And don't feel like the bull market is going to end tomorrow, because they can go a lot longer than what you think. And quite often people who've been through bear markets for years, at the first sign of a bull market, they've seen their stocks are up 100% and they sell them all, and then they miss the next 500% because they jump out too soon.
How long do you think this bull market is going to go on for, and what is it going to end in?
I've been around people like, Rick Rule and guys that have had many cycles of experience to know that trying to predict time frames with that sort of thing is a surefire way to make me look like an idiot. So I have a gut feeling, again, this has got many years to run. There will be corrections along the way. Just about every bull market has 50% pullbacks in it, right? And we haven't had anything close to that yet. So there will be some wiggle to the trend higher. If you twisted my arm to make a prediction, I think the rest of this decade looks very interesting. And I'm assuming we're just talking about gold here, but my gut feeling is, some of the rest of the commodity complex is going to follow. Gold tends to lead, and then you sort of, it's not always the same, but base metals tend to be next, and then energy comes in last. If you look back at price cycles, that tends to be how it works. So for example, now I tend to see the best value in places like the traditional energy space, like oil and gas. There's very little interest in the oil and gas space right now, which I like. I'm not selling my precious metals, but I'm certainly buying more elsewhere right now, for example, just because I'm a contrarian masochist that likes that kind of thing. So
that is a great point, because there is a secular trend that's probably underpinned by the central bank buying and the diversification of a lot of Asian central banks away from the US dollar. So that's an underlying theme. How it impacts the equity markets is different, because not all of that goes down to the equities. But if the people are, and then your other trend that's sort of riding on top of that is, what are real rates doing? And that's when you bring in the people that are, looking at, okay, I want exposure to gold, and how do I get it?
Yeah.
Whereas the central banks are not buying equities, but the producers will get a direct impact from the gold price being higher, so they'll make more money regardless.
Yeah. So you think this is more of a longer-lived thing than, in that case, not a shorter bull market?
Yeah, the thing is that the interest rate decline might be temporary once the impact of tariffs come in and then inflation comes up. But I know the current U.S. administration wants to keep interest rates down, because they're worried about the impact on servicing their ballooning debt.
Yeah.
So they don't want to pay more, because it becomes a bigger proportion of their budget. So then you say, well, you got to keep interest rates down, which is good for gold. But I think the other underlying secular trend is this diversification away from the US dollar in terms of a reserve currency.
Someone recently told me, don't get in if you don't know how to get out. So it might be a good idea to start thinking about when and how we might have to get out of this. So talk to me more about that. Is this a secular or a cyclical bull market, and when would the right time be to sell? Both in terms of catalysts, like what could bring this to a halt, but also in terms of timing, what are we looking into here?
There's two sides to that coin. I honestly believe we're in a secular shift. The data, I believe in data probability statistics, says that 99% of the time, when we're up at these levels, we're going to have a correction. But there's severe supply-demand issues that are going on that are pushing the gold price higher. The U.S. is $37 trillion in debt. Never mattered until now. $37 trillion is the most astronomical. It doesn't even make sense. But now it matters. You know what I mean? And the U.S. has to finance their debt. No one's buying treasuries anymore. They're buying gold. Those treasury debt buyers are not coming back. So there's structural changes going on. But the one thing I look for, when silver really blows off, higher, I'm going to have a tough time hanging on to, the gold miners. But, I truly believe we're in a structural shift, a secular shift that's different from the previous 30, 40 years of history.
Well, obviously I don't know, but my sense is that with the chaos in the world, with that ignorant guy running in the United States, with the Israel bombing different people, U.S. killing people offshore, Ukraine, Gaza, etc. This is not looking like a good world. The U.S. dollar is down 12%. I don't see this changing anytime soon. It looks like it's going to get worse. In that case scenario, precious metals will do well, and then we're talking about critical metals. Again, now each country or area wants to make sure they've got a secure supply of a critical metal, be it whatever it is. So there's a lot of demand for new deposits, new resources from the U.S., whatever, so there's a big push on that. And so I think we're going to, and plus all the electrification and all the power and all that brings in copper. So, no, I think it's going to go on for quite a while.
So I'm back home now, actually, and I've been thinking a little bit about this on the fly. It is jet laggy thoughts, so do keep that in mind. But yeah, this seems to be somewhat the conclusion, right? That this looks like a real bull market, but it's not an all-you-can-eat pass, right? And so be reminded also that no bull market has ever gone by without at least a couple of gut-wrenching corrections. And they will shake out the people who don't have convictions in what they own. So now is a good time for a reminder to listen to team quality and drill results instead of, calls for the moon and stuff like that, because you cannot control systematic risk on the currency or the geopolitical level, right? Both of which aren't zero right now. But you can and you should control what you own. And although I'm definitely not calling a top, as I'd be underqualified to do so, this is a cyclical industry, and bull markets always end. And they usually end when people stop asking hard questions and stop paying attention to what they own. So I intend on continuing to do both. I'm keeping whatever's left of my brain on and still working on tightening up my process and my rules, even when I feel I should be loosening them, because it's very easy to get distracted when you see stuff that are not legit going up, or stuff that you believe to be lower quality than your standards, and you didn't buy them and you see them going up, right? That's not easy. I talked to Ian Castle about that in my recent interview as well. But risk is a choice. And with higher prices during bull markets, it's even more important than usual to know what you own, instead of following people online without understanding what's happening and then ending up owning 100 positions, 99 of which you don't even remember buying and probably don't understand. Been there, done that. And it's also more important than ever, really, to know why you own what you own and what catalysts you started the position for in the first place, so that you know under which circumstances you're no longer going to own it. And although you shouldn't fight the bull market, which again, we seem to be in one right now, you shouldn't completely rely on it and hope for it to take care of the lack of work on your end. Also, in my last interview with Ian Castle, we talked about many things, but partly exactly about that. The number of people professing to understand the space online, and the number of people pretending to be smarter than you, they will increase massively during this bull market. And anonymous accounts, often paid for by the issuers, which you're never going to know, they will pretend to be your friendly next door expert. But and a lot of examples that I could get into here, but just you should take everything you see online with a large dose of skepticism, including this video and everything else you see on this channel. And Setter Plus should become your best friend and nothing else. You could see and hear a lot of things, but it is Setter Plus where you can actually go to get decent information to hopefully and potentially help you make a better decision. That's because during bull markets, it'll become even more important to read the company filings, not their news release and their presentation and their website and the people supporting the company on Twitter or any message boards. That's all marketing, right? As I always say, you should, by the very least, you should read the MD&A, the financial statement, and the management information circular. At least those three documents, even if nothing else, should be read cover to cover. And even if you think that you don't understand them, if you're like, oh, but I'm not an expert, I'm a tourist in this space or whatever, read them. Reading them will massively improve your understanding of the space. They're just words with sentences. Even I can understand the things that are written in there, though not everything. Some of the stuff, well, maybe most of the stuff, or the important stuff in there, they become clear as you just read them. And you can always message me with questions on just email me, Antonio@researchtalks.com, or Antonio on Twitter. Just look for it, and or LinkedIn, whatever it works. And if I know what's going on, I'll tell you. If I don't, I'll still tell you, because most of the time I have no idea what I'm doing either. But point is, bull markets are the perfect breeding ground for inefficiencies. And that's, by the way, what part 2 of my Beaver Creek coverage is about. I went asking the companies who wanted to get in front of the camera with me how they plan on not wasting any shareholder capital during this bull market and what they'll be spending their money on. Because most companies out there will actually not really be successful in that. So, yeah, that's about it for now, though. I'm hoping to take a nap because this jet lag, and it was a 24-hour commute with no sleep. It was not a joke. Also, I'm going from 9,000 feet of elevation back to basically sea level back home, and from 20 to 30% to 80 to 90% humidity back home. So I'm kind of messed up. But yeah, thanks for watching.